Welcome to The Weekly Trend, a podcast for navigating the markets through the lens of technical analysis. The Weekly Trend podcast is provided for educational purposes only and does not constitute any professional advice. Listeners should not act upon the information or content without first seeking advice from a registered financial planner.
Welcome back to the Weekly Trend podcast. Today is Friday, August 22nd, 2025. S&P 500 currently sitting at 64.76. I'm David Zarling. I'm here with football this weekend. Ian McMillan. Is that what you got planned for the weekend?
What? Yeah, I definitely got football planned. I mean, it's getting antsy in the McMillan household. Ready for football. We'll be in Atlanta in like 9 days to watch the Gamecocks kick off. I'm excited. Lots of football documentaries out right now.
Okay.
Because you had like all the Netflix stuff, right? The quarterback.
Yep.
You had the SEC special. There's documentary on the Chiefs on, I think it's on Disney or ESPN.
I didn't know about that one.
Yeah, so they good. The content creators know how to get America excited for football.
Yeah, is SEC one good? I haven't watched that one.
SEC one's good. I think South Carolina, I'm biased. I think South Carolina comes off looking pretty good. Yeah, definitely ready. You said, what did you say S&P was at?
64, 76 or 75, one of the two.
Oh.
I'm looking at it live.
That's where we were last Friday.
Yeah, nothing happened. Nothing happened,
right?
Yeah.
Yeah.
Nothing like a couple of down days to get one foot out the door and get put call ratio jumped. And
it is so easy to get the masses riled up. And then you have days like today where all of that then gets wiped out to the upside.
When we're at the reading for AAII survey for bears, like 45% bears.
45%. And we're in the midst of year 3 of a bull market. We already had the S&P had 10-15% correction 4 months ago. So I hear, oh my gosh, you wouldn't believe, even from friends, Dave, when is the market actually going to sell off? It just goes up, yada, yada. And that so could not be further from the truth.
Well, yeah, we've got, like you mentioned, the tariff tantrum piece. That was a 20% move, February to April. You were just coming off of 22-23, right?
Yeah.
2022-23, we had a 25% correction that took about 11 months. I mean, you didn't reach new all-time highs until January of 24.
I like how you said 2023, because if you use the S&P, we had October 2022 as a bottom. But if you use a lot of other indices, you use Russell, October 2023, we went back and visited the same area a year later. Right. And then we finally got the push higher.
Well, we're still at, even with today's move in Russell, we're not at new all-time highs for Russell 2000. We're still at the same price we were in March of 2021. You look at equal weight Russell 1000, you're only talking about a 7% return since December of 2021. Equal weight S&P 500 finally making a new all-time high.
Yeah, Dow finally making an all-time high. So now you're getting confirmation that stocks want to go higher. What I think, right? We hear about all this, NASDAQ and S&P, and it's like, well, now, equal weight of all of it, equal weight S&P, and this has got to stick. But equal weight S&P's, I think, the biggest thing people should be paying attention to.
Oh yeah, that's a broadening out, and I think you brought up an important caveat, right? We're a few hours from close. If we don't hold this move on Friday, August 22nd, 2025, and we sell off by the close, well, then that's a different story. Yeah. But all we have is the price that's in front of us, and that's what matters most. And if we hold this into close, like you said, you're getting confirmation all over the place. Equal weight, S&P, Dow Jones. I mean, shoot, even micro caps.
You literally took the words out of my mouth. Up 4% today. I mean, look,
it's not,
microcaps, are those all-time? No, there's not
it's not.
all-time, but they're year-to-date highs.
Yeah, year-to-date highs. Well, and they're 3-year highs, 3.5-year highs.
Yeah, they're back into that range from 2021. I mean, this is, and to your point, there's so much fear going into the day. It was a newsy, where do they meet? The Wyoming thing.
Jackson Hole.
Jackson Hole. Oh, I don't know. The trend was still fine, right? I mean, if you talk to a technician, the trend was still fine today. Yeah, we'd have been a rough week, a rough couple weeks for some certain individual stocks, but you got a lot of upward sloping moving averages, including the 200-day. I don't know.
Well, even the Russell 3000, like a broadening out, or you look at the NYA, New York Composite, making new highs, and
all-time highs for the Russell 1000. If you look at IWB, now we got to close here, but
yeah, it's a lot of confirmation. If this holds, we can't complain. Just enjoy the uptrend happening during a seasonally weak period, notoriously. Now we still have September to go. We have next week to go, but a lot of things confirming.
And maybe we don't get right. Seasonality is just an average.
Yes.
It's just an average. And we can have a pretty low volatility. I mean, for what is expected, like you said, it's really August through September. But yeah, maybe we buck that. And again, yeah, we still have 5 weeks to go. Really, you could even say into October, the seasonality is a little sketchy.
Yeah, into mid-October for sure. And I just find it interesting to see small caps potentially bottoming here against large caps on a relative basis, considering the sentiment behind it all. I mean, first of all, you have overall sentiment for stocks in general, right? You have a put call ratio that jumped, especially at the index level. You had more bears than bulls on surveys. And then you add on the layer of small caps, and like in that AAII survey, what stocks are you favoring right now? Small caps least favored. We covered it ad nauseum. The outflows
about last week, isn't there a record short in?
Yes.
Which yep. I get, right? Because there is, and I kind of brought this up to JC a few weeks ago on their show. They say, oh, people keep shorting biotech. Well, there's hundreds of billions of dollars in long short funds, people that have to be net neutral. Like, I get why people continue to pound the short tech, short net, or short Russell theme. But yeah, if that unloads or that reverses, boy, howdy.
Yeah, you have a scenario on your hands for short squeeze. And that's how it works, right? If again, I'll reiterate, you should get nervous when you have moves 2, 3, 4, 5% where no one hedges. Like, you don't see a jump in the put call, you don't see a jump in premiums for options. That's when you say, okay, because all the shorting is future buying, right? Because people eventually have to close those, and the way you have to close them is you got to buy stocks. And before we pivot on to international stocks, I do want to highlight the support of this podcast, the Adaptive Select ETF listed on the New York Stock Exchange under ticker ADPV, which helps investors access to the most prevalent factors in markets, momentum, and relative strength. Through proprietary identification methods, the Adaptive Select ETF attempts to own the strongest 25 large cap stocks when the market is in an uptrend. And since not all market environments are the same, Adaptive Select seeks to prevent extended declines by moving to short-term treasury bills and cash during long-term market downtrends. Investors can find out more, including how to invest in ADPV, by visiting adpvetf.com or calling 1-833-880-5200. Investing involves risk, including possible loss of principal. Distributed by Quasar Distributors, LLC. So we talked about a lot of the major indices. I think it's also fair to say, considering the support of this podcast, momentum still has a grip, still in an uptrend as a factor. Momentum still alive and well, and that's a risk on factor. But even internationally speaking, it had a strong start to the year, international, and then kind of petered off the last few months. But here, based on the work done internally, and you saw it too, you rolled through a lot of charts. There's a lot to like going on, setting back up for international for the second half of the year.
Yeah, and I like that aspect of the workbooks. Obviously, foreign is kind of its own thing, but like I told you and Kevin yesterday, went through. Can't tell you. I mean, the whole ETF universe just started at the very top and scanned it down as to what's working, what you should be paying attention to, particularly on a relative basis, right? That's so important. Something that gets talked enough about. Maybe we don't talk enough about.
Yeah, let's talk about it. Let's talk about this.
Relative strength is so important. Yes, being in an uptrend on an absolute basis, you want to pull up your charting platform and you want to see the chart going from lower left to upper right. That is important. But we have a lot of relative strength, relative behavior is. I saw a great tweet last week, and they use a much shorter relative strength than we do, but they were talking about how they actually look at the relative chart first before even bothering on whether they're going to pay attention to the absolute chart. And I think that is great. I mean, I don't look at anything if it's not above a relative 200. Like, that's the minimum. We want to own things that are outperforming a benchmark. That is.
It's an opportunity cost, right? Every dollar that's being invested, you have choices. That dollar can go anywhere. You could just leave it. You could put it underneath the mattress. And then you've got a bajillion other things that you could put it in. And what's your process for identifying, right? Because like you said, you could buy an absolute uptrend, but if you buy a relative uptrend,
right?
Even better.
The S&P right now, like at this day, and I think Dave's so right, he always calls it the golden age of investing. I think that the golden age of investing will only continue to get more and more frictionless. But yeah, you can essentially go buy the S&P for free now. 4 basis points, 3 basis points, whatever Vanguard and State Street are charging, right? So you can own the S&P for free. So if that is your baseline, and for the business we're in, that's really right. That's an alternative. That's a realistic alternative for our clients. They don't have to pay us a percentage if they can turn around and go just buy the S&P. So what are you going to do that's better than the S&P? You have to be better than that for that risk tolerance. Obviously, not all clients are 100% in equities, but for that risk tolerance plus a fee, you have to be better than the S&P.
Yeah, you got to provide value.
And that is where relative strength comes in the factor. You cannot beat the benchmark if you don't own things that are beating the benchmark. It's mathematically impossible.
So true. So simple. So true.
And so, yeah, you got to bear those down. And back to our original point, that I feel like is setting up again for international. Now they're underperforming a little bit today, but I think it's when I see it, and there's some international that's done better than others, some that has held up really well.
Well, and the fact that European financials can continue to be bought hand over fist.
Didn't stop, right? And that's another thing. So we talk about relative strength, not just on a chart, but I don't have to look at a chart to know, well, the S&P kind of got whacked this week, and this stock or this ETF was either sideways or up. That in itself is relative strength. And you saw that a lot out of foreign.
Yep.
Particularly, yeah, I mean, European financials.
Well, do you know where the idiom hand over fist comes from? Like what that?
I do not.
I had to look it up myself because I just said it. I'm like, well, wait a minute. What does that actually mean? Well, I mean, I know it means at a rapid rate, but it comes back from nautical hand over hand, describing sailors climbing a rope.
Wow.
So European financials, they climb in that rope. I mean, you look underneath
the rope.
You look at that, what's underneath the hood: HSBC, UBS, Allianz, Deutsche Bank.
Can you imagine that?
GLE, Societe Generale, ACA, like all these names, Credit Agricole, they're getting bought.
Deutsche Bank up 396% since October 2022.
So is the world coming to an end if we're buying European financials?
No.
Probably not.
Right. And we joke about yesterday. I love the idea of American exceptionalism in the stock market, because that's what it has been for 14, 15 years.
Well, yeah, it's where we live. It's fun.
But if I got to go by Italy, or I got to go by European banks, that's what the chart says.
Well, and like I think you brought up during some of our market calls, just like though there will be a decade or something like it in the coming years where international outperforms. And that's differentiation you want. And it's just unique, right? Because it's a little different mindset. It's potentially not as sexy, right? You got a lot of European or international things in the portfolio.
Well, you want to own NVIDIA or HSBC? I mean,
Right.
Clearly I want to own NVIDIA,
Right.
but I got a fiduciary duty too to try and beat the benchmark.
Mm-hmm. And so that's not to say we shouldn't own a NVIDIA. It's just you do that ratio analysis and you identify where the strength is. And when European financials are setting up in such a way to outpace the S&P, you at least have to consider that opportunity cost, because in the end, price is price and relative strength. Pick the things on a relative basis that are climbing the rope. I mean, even, okay, gold miners and gold. Like
Gold miners moving higher, had a good week. Gold is still not, well, maybe it did today. Let's see. I mean, it's still, golly, that looks so good. I assume it goes higher.
But you brought up in the past, it's nice to see gold miners outpacing gold. And we're at 3 or 2.5 year highs, gold miners versus gold.
And you're getting a 4-month consolidation out of gold up here. So, it's working off this uptrend exactly how you would want. Are gold miners giving you a clue that gold will eventually go higher? I mean, right? And then you've got, right? So the other side of this is the dollar. Well, the dollar continues to trade below 100, getting walloped again today. Really continues to trade below 98, 99.
Mm-hmm.
Which I know you say, well, Ian, that's 1% less. That's a big deal in currency world.
Yep.
Yeah, I think, right. And the next stop for dollar is back to one using Dixie, which is a dollar index technically, in 89. So what does that do for gold and whatever they're going to tell us a weak dollar is good for, I guess, small caps. I wonder if that'll be the thing we'll go back to, and that'll be the mantra, which is fine.
Yeah.
I don't
it's
think
fine
it's
if they want to. Fine if they want to change the narrative.
Yeah. If now all of a sudden weak dollars good for small caps, that's fine.
And speaking of things priced in dollars, what do we have going on in crypto?
Crypto a little fun now, of course, having a good day today.
I find it interesting how well Ethereum has held up going into this pretty massive range it's been in for a while.
Yeah, and you wonder if, does we see small cap equities outperform? Do we see the altcoins outperform? Right? Because even today, you got Bitcoin, like everything, ETH, Solana, Chainlink, Cardano, Ripple, Litecoin, all outperforming. Ether's up, 10%, 9%. And that, right? Holding 4,100 on Ethereum. I should have listened to Eric Trump when he told me to buy.
Well, even like we talk small caps, Chinese small caps.
Don't get me started on China.
Let's do it. I'm
not a commie, but we're allowed to say that on the podcast?
Oh, yeah. We could say that.
You can say that. It looks good.
You could offend the communists. It's okay.
Yeah. What do we care about offending
communists? But we'll participate in their stocks if they're in an uptrend and a relative uptrend, and there's signs there as well.
Yeah, I like it. Especially the tech side, like a CQQQ, big breakout today. Wow, 6%. Ryan, so then you want to back that down. That's probably your Babas. What was the other big one? Baidu. Golly, remember when Chinese companies used to get so much attention
Yeah, I was going to say Baidu, PDD.
PDD.
And they used to be, and it's terrible that I'm not going to be able to look this up at this time. But I mean, BABA used to be a really huge weighting in, I'm not saying it's not a huge weighting in CQQQ, but I remember when it was a pretty large weighting in as an ADR in QQQ.
Yeah. And it was big in FANGs. One of them, MAGs or FANGs.
And I mean, you've got Tencent, Baidu. I mean, there's some, it's going to be an interesting finish to the year. And even like, if I could pivot back domestically, I mean, XLC, communication services, not bad. You throw on that top of that financials. If your leading sectors are going to be communication services and industrials, technology, financials.
Definitely has a small cap.
Yep.
Vibe to it. Definitely has a 4 and 5, right? And that's just, I'm not even like, it's not like Europe has better banks than we do. Like, it's just the way the indices are weighted.
Yeah. Yeah. A simple way to think about it is you're a lot of foreign, especially Europe, indice makeup is financials. US makeup is tech. That's definitely a true story. What else do you want to cover, Ian, for our listeners before we ask them to give us a high rating and share what we're talking about here?
Yeah, I mean, I think we've mentioned it's a lot of participation, a lot of confirmation going on today. Yeah, we've got 4 hours. We gotta stick it. I think value, the fact yesterday RPV, pure value, was already in new highs, was kind of a clue.
Your point is being
value is still right. And then right, let's take value. And then let's do top down on that. So again, that's your small caps, that's your foreign, that's your industrials, and those types of things. And those stocks didn't flinch. And yesterday, before today's big move, right back to new highs.
Yeah, lots of things.
Didn't we have like 280% up days last week or something?
Yeah, if you use like S&P, but if you use like NYSE, there was one.
So thrust-ish.
Well, even a couple months ago. I mean, we're not too far removed from some breadth thrusts that happened not too long ago.
Well, and so what's one of the biggest things that we love to talk about? So breadth thrust happens. Twitter data dump on how bullish this is 1, 3, 6, 12 months out. We all talk about it for 24 hours. Then a month later, we have like a 4% correction. Everyone, like, I think that's the perfect example of just how minute to minute and siloed things are with investor behavior. When it's like, well, hey, wait. Didn't like 3 months ago, we have this breadth thrust, and that was supposed to be like super bullish for the next 12 months. So why are we worried about this?
Right.
And then everything's fine, and we make a new high, and I don't know.
What I find interesting is like when you talk about opportunity cost and relative strength, is just when you look at like let's use technology. We can use XLK, right? XLK near all-time highs. XLK versus S&P is not. And so I'm here to throw a fly in the ointment. I'm not going to look up that idiom. I think we all know what that means. But the fact that there's a divergence there, does that resolve? And I'm only bringing it up because, right, this is about as bullish as we've sounded on this podcast in a while. Maybe that's a clue. Or is it just rotation that you've had such underperformance from value and small that you're going to see XLK hold up just fine, but you're just going to see these other areas start to outperform, and that's perfectly fine. You know, it's kind of like when you talk about staples can go be in an uptrend. That's fine. It's when they're in a downtrend and outperforming, like going down less than other stocks. That's when it's a problem. So yeah, I mean, things continue to look good, to your point. Trying to record new all-time highs, uptrend is still intact, 1 foot out the door. When you think about the old adage about market sentiment, I don't think we can call this euphoria right now. To your point, friends and relatives, clients, concerned that it was just a couple of weeks ago, we're going to get a recession. I don't know. We typically don't know that till afterwards.
Tariffs, man. He doesn't know what he's doing with tariffs. This is so bad for the stock market. I don't know. Maybe.
Yeah, maybe it is. Doesn't appear to be yet.
What if we go back to 1968 to 1982? Okay, maybe. Actually, a great period to use the 200-day moving average. Maybe. I don't know. I know that currently the trend is up. 200 days up. There's confirmation from a lot of areas. Europe looks fine.
Well, it's one of those things where John Templeton said bull markets are born on pessimism, grown on skepticism, mature on optimism, and die on euphoria. I don't think we're at euphoria.
No,
I don't even think we're on. I'm not even sure we're on optimism.
If this thing grows on skepticism, it could be a 7'8", 13-year-old. I mean, yeah, because, and I think, you talked about it. We got a 3-day sell-off. We got the put call ratio to spike back. Essentially, if you want to call it, for lack of a better term, a fadeable level. Watch people get spooked. As my dad liked to say, tap on the fish bowl. Watch the fishes scatter and then reset. And there was a lot of resetting under the surface.
There was
a lot of momentum. So you say, Ian, well, it was 4-day sell-off. Well, go look at some momentum stocks. Go look at some of these high flyers and what happened to them over the last 5 to 8, 9 sessions.
Well, and I think it was a little bit telling on, I think it was the 19th. So Tuesday. So really positive breath. Most stocks up, indices down.
Yes. You shared a graphic on that.
Yeah, it was there's only 2 days with better breath and a bigger loss. And I'm going to try to describe what I'm saying here to those listening. S&P 500, if we can use that metric, on Tuesday was down. A lot of indices were down, but most stocks were not. It's that factor that happens with the Mag 7, right? The top 20 stocks.
I think it's the best way to put it. It's like the reverse.
Yeah, it's like the reverse. And you saw positive stock buying on that day, even though indices were down. Now, for some, it didn't feel like that, right? I know I understand that a portfolio that has stocks in it, those, if they're momentum stocks, they would be down on that day, but the majority of stocks weren't. On the 19th, I mean, you had a 55% up day in the NYSE. Yet the NYSE was down. So that's that large cap factor when those correct a bit. But when you saw that positive breath during that time, it's another thing to check a box and say, okay, risk is still on. And that's really what we have. And I do think it's telling that you've highlighted spike in the put call, jump in option premiums, completely negative sentiment on small caps, completely negative sentiment on stocks overall. But yeah, you do the work and you look through all the workbooks and you study all the different charts out there. Lots of things setting up. And is this a breath reset at this point? Time will tell.
Or it's not. And we've got everything else into participation stage now, like the Dow.
Mm-hmm.
And they're moving to new highs. And we've checked that box, but they go back underperforming. That's also a possibility. I don't know. I won't know till the next candle shows up. And even then, I probably won't know.
Bayesian statistics. Bayesian statistics, it matters. So I appreciate you doing this again with me. We hope our listeners appreciate it. Best way you can repay us is share it on your platform of choice. Give us a high ranking. Share it with your friends, family. Get the word out. Obviously, you guys can always disagree with us. That's what makes a market. But right now, uptrend intact. Price continues to confirm, and that's all that matters is price. But Ian, thanks for doing this again and highlighting all the interesting setups that we're starting to see. And we'll do it again next week.
Have a great weekend, everyone.